Hey guys, I hope everyone is doing well. And if you are still enrolled to the channel in spite I'm not publishing a lot recently, I really appreciate and I do thank you for that. It has been a very busy period for me, but I'm still very much into markets. This has been a very good year and I hope for you as well. And I want to provide you some insight with what will happen likely in the next month. And at the end of the video I want to give you some stock recommendations on where you put your money if you are still looking for sources of gain for the next year. Alright, let me talk about the market first. So it's very difficult to understand where the market will go in the short term. Because the market is at around 3% from all-time high. But recently there is a change of the narrative, which is, and I've been saying that since years, is the most critical, difficult and risky thing that can happen to the market. The numbers of the unemployment are going up. I have been saying since a couple of years that when the unemployment goes up because of the artificial intelligence is when probably there is a game over for the market. And please don't forget to click the like button and subscribe. So why is game over for the market? It's game over for the market because if you look at YouTubers, for example, I hear a lot Jeremy Lefebvre, financial education is making a lot of money. He's making projections of the stock for the next couple of years where revenues and profits increase by 10%, 15%, 20%. But imagine the unemployment is going up by 1% each year, which is a very slow increase. So next year, 1% less of people are working. Instead of 96%, we go to 95%. Do you think the same company will have more chances or less chances to sell more Nike shoes, to sell more cosmetics, to sell more energy drinks, to sell more things for a dog, and increase growth by 10%? I think there are more chances that the company will likely earn less. Why? Because less people can afford the house. If there are 1% more people unemployed, likely less people can afford the house. So it's a spiral which can be driven by the artificial intelligence. And there are a lot of discussion on whether the AI works, whether it doesn't work. I think that marginally for something is working. For example, when I try to make a macro at work, I can go on ChatGPT and it will do in a couple of minutes what I was spending hours before to do. When there is a legal research, they need some information quickly on some laws, it gives the information. There are other things where it doesn't work if you need like advanced financial statements or understanding very complex tests. It's really tricky where the artificial intelligence is going. But I think that it can create a gradual unemployment because more or less we'll start to work better and better. CEOs are greedy, so whenever they can fire, they will start to fire. And I don't know if someone can fix it, because, like, how can you fix it if the work of the programmer is being done by ChatGPT? How can you convince a company to hire the person back? And when this unemployment starts to rise, it's risky. So if overall demand is risking to go down, and maybe it's not now, maybe they will tell you right now the numbers are going up, like companies, UPS, Amazon are firing a lot. If you see the numbers, now they are going up. But it's not 100% clear that this is a definite trend. It can happen that then they drop, and Donald Trump even fired the person in the US who was keeping track of the jobs, because he said that the data wasn't reliable. So he hired the person with the perceived scope now to keep the number of unemployment low. So it can give cocaine to the market, but still, at a certain point, I think it needs to pop. So the company that work on the AI, there will be winners and there will be losers, but still I see a sense for them to earn more, because all companies will be greedy to try to find a way to either improve their products or get rid of people. And I think this is a different technological revolution, because the AI is not coming to help the humans, it's coming to replace the humans. So the AI is not coming to help the man. It can help in some situations. For example, like this, I was buying a flat recently, so the real estate companies now prepare with the AI some nice videos of the house, and then it's a way more to incentivize the client to buy, can give them an edge. But there are, I think, it's more specific for the companies to try to fire people than to try to really gain from that. I mean, I think it's more about getting agents who replace humans. So yeah, so the market is in a very dangerous position. This is the bearish argument. The bearish argument anyway this time is very strong. It's very strong because I think there's no solution, because generally when there is a recession, what the bank does is lowering the interest rate. If there are lower interest rates, for example, there are more people buying houses, and so they'll start new projects for buying houses. But there needs to be, so like the unemployment restarts. But if all these corporations don't hire people, I think are the part of the population that makes more money, it's difficult for the cycle to restart. So we can really see a market decline of 50% even. And why I say 50%? Because when you run the valuations and you put that instead of growing, the company's earnings decrease, the valuation starts completely. Then Wall Street will start pricing also the fact that everyone, I mean, Ray Dalio is saying that since at least 3 years, that they started to say on the channel immediately as well. Difficult to restart. So this is like the first point of the market bearishness. Then there is a second argument, which is the bullish one. That is the fact that the central bank is printing money on money. This is also true. But, and the dollar devaluation, but I hearing about that really a lot in the last couple of months. everyone was talking about the dollar devaluation, that you need to be invested in assets, they print money and the dollar is worth less and less and less. And I wonder whether all these videos and all these narratives were supported by the powerful of the world who wanted this narrative to be shared with people, because they wanted everyone to get in the market with the fear that their savings will be lost by the devaluation. And then when they checked that everyone got in and they could book huge profits, they can really flash it down. So this is a little bit a thought that I have, but on the other hand, it's true that this devaluation will continue because states have a huge public debt. They need to lower it. One way to lower it is inflation. So if there is inflation, asset prices go up, so also prices of stock. So this is a very good bullish argument that even if there is unemployment, but they print money and money, things can still go up. Which among the two, the bullish and the bearish component, will likely win? If you were at average valuations, I would say that maybe this money printing would win. But as we are top valuations, I think that there is a higher chance that at least we go to average valuations to account of this risk of unemployment, then we increase even up. In a 3-year span, let's say, then if the next 5 months can still go up, I think so. So that's where we are with the market, I think. We are in a very, very risky market, which can still go up for continuation in the next month. And where do you want to put your money given this situation? So first of all, a critical point is the tax harvesting. I realized myself this year how much is important the tax harvesting, because I had big gains on a lot of stocks, which I realized, because I think that when the stock is fully valued, I remove my money and I put it where it's undervalued. So I had massive gains this year. And now I'm starting to realize that I need to pay massive taxes. So what you do if you need to pay massive taxes? Option 1, you pay the tax. Option 2, you need to close something else that didn't work, realize the loss, even if this is something extremely undervalued, and close and not have a gain anymore, and not have a gain that will create you taxes anymore. So what will happen in this part of the year is that many stocks are getting crushed just because people need to take the money, avoid paying taxes. This is something sure, like the fact that the stock will go up, will go down, it's all relative, everyone in Wall Street knows it. The fact you need to pay the taxes is something certain. So the stocks which did bad, it's very likely that by the end of the year, no matter if they have good fundamentals, no matter the story is getting better, someone will close them to pay the taxes. And this was the case of Meta in 2022, when it got to 88, that 120, it still didn't make sense, it still looked too cheap, but it arrived to 88. So don't rush too much to buy these undervalued stocks, because still the market can crash them down just because it's better for them to sell than wait a month and buy back, or buy another one which is in a similar sector and is still undervalued and take the loss on that one. A very, very dangerous situation, this. tax harvesting for some stock. And especially if it's a stock that is crashing but is still overvalued, or that the fundamentals are getting worse, and you think that one day they will get better, but at the moment they are bad, it's really, really difficult. This stock will go up by the end of the year. So be careful. Anyway, apart from the tax harvesting situation where you want to put your money, I tell you what are my biggest stocks that I think will do well. So the medical sector, you will still need it, and many companies are very, very, very undervalued in this sector. So there is Bristol Myers, Pfizer, Merck, Novo Nordisk. I think these are very, very good buys. Even if you take the ETF, XLV, I think it's called, you should be fine with this. But I think the stocks have more room to go. There is always the risk that the company gets disrupted, but there were massive insider buying of people that know what they are doing, are in the business, and the insiders are putting there a lot of millions of dollars from their pocket. I think it's good. Then there are the other companies on which I'm bullish are Salesforce, because I think they are a leader together with SAP in information to the companies. They are doing these AI agents, which I think can be the next big thing in the news next year, that they will start replacing people. I think they should have a kind of edge. So I think will work out, can go up next year, and the valuation looks really good, running discounted cash flow. And then I think other two companies which I have, just because they're too cheap to ignore, but I'm a little bit worried about the fundamentals, are PayPal and Adobe. So if you look where they are right now, you look their valuation and what they are declaring they will earn in the next year, these look very good. So I think they can grow if they still keep their promises. But on the other hand, do we really need PayPal? Maybe Google will push to do their payments from Google Pay, Apple will push from Apple Pay, you can do it from the bank. Is it really needed? I don't know. So these I see more risks. Adobe, I don't know how the AI will influence, but I think that the AI can eat at the plate of Adobe, but still Adobe can use the AI because they probably have very successful engineers. So these are more a 50-50, but they look undervalued. Then if the earnings crash, they will not be undervalued anymore. So these two are more risky, guys. But on the first five, the medical sector and Salesforce, I'm quite good. Magnificent 7 I would skip at this stage. Rest, of course, difficult. Maybe oil. The oil looks undervalued compared to the rest. I think is at the minimum ratio oil to gold, and insiders were buying oil stocks already since a couple of years. So I would say leave oil could be also, oil stocks could be good money maker. The rest that is depending on consumer, Amazon, Tesla, and so on, I would really skip, because when the unemployment grows, I see them in a very bad shape. But of course I can be wrong. I just tell you what is my opinion. Let me know in the comments, what do you think? Where, of course, I have all discounted cash flow supporting my investment idea, but right now I wanted to do a more talkative video. Let me know in the comments below, like, what do you think, where the markets will go, where are you investing your money? It's always interesting for me to know. If you are still here, thank you so much. I really appreciate you. Good luck with your investment.